Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our final live class of the day, Building a Stock Portfolio. I am your host, Kevin Horner. I'm joining you from the Denver studios. Thanks to all of you for joining and participating in today's segment. I'm also joined by my friend and fellow coach, Connie Hill, in the chat there. Say hey to Connie, who will get to comments and questions I'm unable to, but I always try to keep a close eye on what's happening in the chat because so often your questions are pertinent to the topic at hand and certainly address some of the nuance that we incorporate into this class. So where appropriate, I'll certainly be happy to bring those comments and questions to the discussion. So please feel free to post in there in the Q&A, that is, for the duration of our show. We go about 45 total minutes. Now, if you're not already doing so, follow Connie and me on X. It's a great spot to find us. We try to post for you throughout the week some notable charts, maybe some data points in the market. You can follow Connie at Connie Hill CS, and I'm available there, Kevin Horner CS as well. And today we'll ask you, of course, to make sure you're subscribed to the channel here. While we are offering you hours and hours of live content every day, don't forget the vast majority actually, of this live content is available in our archive on the channel here. And all of those archive viewings are available to each and every one of you at your convenience. So please take advantage of those. Now, today we are going to start our segment off with a very brief review of how the markets closed. We've had a great start to this week. And after that, we're going to look at our example portfolio. There's been a couple of trades that we need to address. So some positions that we've moved on from and some trades that we're in the midst of, example trades for the example portfolio that we need to raise stop orders on as well. So we've had some good developments for the portfolio. It's always nice to make adjustments when stocks are moving in our favor. So with that as our lead in, let's get to the disclosures and then we can jump to the chart. So please remember that everything we cover is considered informational and educational only. We are not making any recommendations and certainly not endorsing a specific approach to trading the market. What we do offer here are concepts and strategies traders may choose to employ as you review areas of the market, but these are merely ideas. What we invite and encourage you to do is to utilize these ideas, fit them into your own personal plan for trading, and then customize them to your liking. And that process, that consistency is where in the long haul for traders, we are often rewarded. So we want to make sure that we are bringing that consistency to the table. And that's really what we'll stress here as we work through the steps of order entrance and management of stops and the like. So that's really the most important takeaway for today's class. Now, we do work most of the time in underlying equities, and we will not address options today, but as all of you know, options are slightly higher level of risk. They are certainly not appropriate for all traders, but we try to stick to the underlying stock here in this class as much as we can. And so we'll get started today with a quick look at the S&P 500, which did move outside of that consolidation channel that I'd drawn in. That is a wonderful development. Yesterday's move was real encouraging, and then of course today you could see that the candle was an extension of that breakout. So we've got a continuation follow through day today. If we were going to put a little bit of math on things, we could always do a Fibonacci move from the peak, which was back here in early June, to the lowest low we made very shortly thereafter, and we can kind of calculate the approximate extension level at around 78.45, and that may be a target that some bullish traders in the SPX are looking for. Of course, whether we are utilizing a measured move calculation like this with the Fibonacci sequencing or doing some mathematics on our own, none of these measured moves are guarantees to be achieved, but this is a manner that some traders would try to get an idea for a potential target. So maybe 7,800 as a short-term target due to the nice round figure that it offers, and then perhaps as much as 78.50 based on this potential extension that we are looking at. Now, let's look at the NDX. We got a nice day today, a 3.3% move. And depending on how you choose to view it, some traders would say, well, we broke the downtrend today, Kev, with this move. Some would say, yeah, but we didn't really do it with conviction. We closed above it. But, you know, those manually drawn trend lines are always a little bit to each their own. That's because, of course, each manually drawn trend line is going to be a little bit different. But if we took that line, duplicated it, and brought it down to the bottom of this channel, I'll tell you, if we extended this into a weekly look, it does resemble a beautiful bull flag pulling back to the 20-week moving average. We'll see if this plays that way, but it is a wonderfully positive development in the short term. Obviously, the remaining days of this week will carry a ton of weight as to whether we're going to see the NASDAQ truly in true recovery mode, or more what I ought to say here is probably continuation of the uptrend we've been seeing. And you know, the more time that passes, the more evident that this may very well become. But it was a big slingshot move off those March lows to the peak we made over 10 weeks. And then we've just basically spent the last 2-3 months here in that pullback and consolidation. So perhaps we're looking at something larger at play with the NASDAQ 100. And then finally, we'll peek in on our small caps, which also got a wonderful day. Looks like a new all-time high close on the small caps today, as yields pulled back a little bit. They do remain elevated. It's absolutely notable that they remain elevated, but yesterday's close through the downtrend line that I had drawn in might have been the type of maneuver that got some traders a little bit excited about it. So that was a real interesting conversation yesterday I had with Jeffrey Abelos, and the market just really took off after the completion of Trader Talk. And then today, more of a continuation move in the Russell. So beautiful stuff here in the broad indices. We'll see if today's after hours earnings conversations will have impact on carrying the market additionally higher tomorrow. So with that, let us move into our look at the example portfolio. But most notably, when we do that, we're going to the account statement first, because we need to go back in time 7 days to see the trades that have executed. Now, the big ones, first of all, we're not going to talk about Hewlett Packard Enterprise. That's a trade that I placed midweek last week as an example for myself, so that gets kicked out. We did not do that in class. What we will talk about is the RSG trade we entered early last week on Wednesday morning on the 30th. And then we went ahead and we actually got stopped out of it really recently. As of today, it looks like we got stopped out of it, but for a minimal loss. So we'll look at the RSG, we'll look at CVS, which we do own now, and we will look at KHC, which began a little while ago, as a matter of fact. Why don't we lead with that? Let's go back to our drop down. We'll change this to the last 30 days, and let's just do KHC specifically. So what we did here, everybody, we did a buy back on the 15th of July. We split this trade in two. We bought 100 shares of stock, and then we bought another 100. We bought them at the same time in the same price. And we did that because we wanted to mitigate the risk factor of not having a stop order if we were to get partial execution as we had hoped. And that's exactly what has occurred. KHC has rallied. As you can see, we entered at 24.77, and we had a partial bracket to sell half of those shares at our limit of 28, and that's what's happened. So now let's take a look at KHC in the, I'm going to open up my watch list here. And I'll open up the Scratchpad as well. So for those of you who are new, the Scratchpad offers you some insight as to our general criteria for placing trades in here. Our goal is to not exceed $1,000 of risk on any trade. And additionally, it is to not exceed $10,000 in size of any trade. And we will maneuver around those two calculations as much as possible. Ultimately, we are looking for stocks that are in leading segments or groups of the market that have potentially turned a corner and are ready to begin new short-term uptrends. And we're looking for stocks that are the leaders in those spaces, typically. And what we are defining that as are stocks that are trading above a 20-day, a 50-day, and a 200-day moving average. So we are seeing uptrends in all three of those timeframes. And KHC, as you can see, we bought in. I'm going to zoom in on the process here. We bought in after monitoring what was happening here. We had a downtrend line that was broken. And then we broke it to the upside, got above our 200-day moving average, which was really when things started to improve nicely here on Kraft Heinz. And we've established the 200 shares back in mid-June, or July, excuse me, the 15th. And then as you can see, we took out 100 right here on this extended tail into resistance. This is one of those examples that's not all that shocking, that we got an intraday high at resistance and it pulled back and needed to make a higher low. And notice we did that a couple of times here, everybody. We've made a higher low right here, made another one right here, both of those coincident with that rising 20-day moving average. Now, we've exited 100 for profit. We have 100 remaining, and we've got those 100 remaining in at a stop of 24.69. Now, given that we've been working with that 20-day moving average as support now, the trader has the choice. Do we leave the stop where it is? Do we raise the stop? Today, we're going to raise the stop by using the 20-day simple moving average. Today at the close, it's 25.87. We can see it right here in the margins, everybody. And let's add in our average true range. Remember, average true range, ATR, this is measuring the low to high of the last 14 trading sessions. It incorporates gap moves as well. So this is giving us an idea of true volatility. The goal here is to stick with the position for as long as the short-term uptrend is running. And in this case, we're going to believe in the 20-day moving average here. So if I just put the 20 on, so we've got our visual on it, and I add back the average true range to it, we're going to do the math. 25.87 is the 20-day, and then we're going to come beneath it by that 81 cents of the ATR. And that tells us that our new stop needs to be at 25.06. A couple of things. We like the 06, 6 cents, not the same as a 5, not the same as a 0. Alternatively, the trader could also come beneath that amount, okay, that ATR amount, by another measure if they want to increase the likelihood of staying in the position. So maybe it's not 25.06, maybe it's 24.96 as an example. So let's just go ahead and click and drag our stop on this 100. We're going to move it up to about 24.96. There we go. And all right, we're all set. So we're working to reduce the possibility of losing profits we've already captured here. So it's super important that we are maintaining our exit strategy. Now, with this stop, it's a trigger at 24.96. That means that our execution, once triggered, is a market order that could execute at any price. So we have to be aware of gap risk still, okay? But our goal here is to try and maximize the trade we have placed. And remember, we've already taken off 100 shares for more than $3 of profit. The goal now is to ensure that the 100 we have remaining are sold for no less than a break even, an ideal scenario, right? If we can unload those at break even, then we are walking away with a locked in profitable trade. That would be a great concept to manage and work with as we go forward, of course. So that's really the goal here. So KHC, we have elevated the stop on that. Nice little way to kick things off here this afternoon. Let's see. Well, we have a survey already. That's great. Nice and early. So, of course, always love to hear from you, everybody. Your comments are absolutely valuable to me. And I would appreciate those insights if you have them to the time to do it. If you click that link, it'll open in a browser window right next to this presentation window. You can get to it post-class. Takes all of 60 seconds. So any comments you offer, those come to me directly. And I always appreciate hearing from all of you. So thank you, everybody. Okay, so there's the KHC. Let's go ahead, look at CVS. We just got going on CVS. I'll put up all my major moving averages once more. As you can see, we bought in on the big deep candle day. And because we'd had a trade get stopped out along the 20-day recently, we decided to work with the 50-day moving average. And you'll notice the 50-day today is at 101.57. And the stock has gone down, 4 days. it's below the 20-day, chances are we're not going to make an adjustment here. So our 50-day is 101.57. And our ATR is $2.43. And that means we should be in the neighborhood of 99.15 or so. Currently, we're in at 97.92. Now, this is a trader's decision, really. This is one where today we will maintain the status quo. We are not going to make a change to the stop. But if you were the trader who looked at this and said, well, I'm sticking to my plan. My plan is to raise the stop maybe once a week. And when I review it, and if today is the day you review, the 50-day moving average is higher today than it was a week ago. And if that's the case and you want to raise your stop by an equivalent amount, by all means, you should feel comfortable doing so. Remember, the key we're trying to do is not reduce our stop prices. So we're going to happily stick with our existing stop. If we get stopped out, it's going to look more like a true breakdown in this instance for CVS, and we're comfortable with our risk. Yes, we are in at 109, and if stopped out, while we can't guarantee it, we'd be selling about 97 change, 98, let's call it. We'd be risking about $11, 11 and a half a share, but that's a comfortable amount relative to our tolerance, everybody. So that's how we built the trade. And I'm going to elaborate on that when we build our next example trade here momentarily, just to give everybody a bit better understanding of how we have built all of these existing examples. So CVS working in our favor. We're not going to make any changes just yet. At least it hasn't broken down. I shouldn't say it's not profitable, but we're not going to make any change to that existing stop. So let's go back to our standard moving averages. Let's check on Dollar Tree, saving the big mover for last. Dollar Tree, everybody, we've got a trade that we've been in here for a while, as you can see. We bought back in here around the 200-day moving average. Stock has been moving in our favor. We have a bracket on this one. We've got a stop on the full position at 114.71, and then we have an exit up here at 135. So if at any time we get to 135, we're going to sell all our shares. Or currently, if we dropped all the way back to 114.71, we would sell all our shares. Well, now the stock has really continued nicely higher. So we can make an adjustment to this. The question really just becomes, how do you, the trader, want to manage it? Do you like the 50-day? Do you recognize that, the last time we got up there, look at how, we came back to essentially that level, right? So we broke the 20-day pretty resoundingly, and granted, we have bounced right back, but if you were working with the 20, you may have been stopped out, right? And right now, we are below the 50-day. So the ATR on Dollar Tree is $4.28, and so maybe you would you want to stay $4.28 beneath 117.98. Alternatively, you want to stay $4.28 beneath the 20-day of 125.56. So we can hold steady here. We can leave our stop order where it is. We could also raise this up to about 121 and change, working to bring in some additional profit if we were to get stopped out, recognizing that any gap up to 135 or any move to 135, we're going to be sellers anyway. So the question is, do we stick with it? Do we raise the stop? I think we raise the stop and try to capture a little bit here. Remember, we're in just shy of 110. And while we can't guarantee an execution at around 121, that would be a perfectly appropriate exit level for a 10, 11, 12% trade. That would be great on weakness to be selling for 10 or 11% profit. For a lot of traders, that's adequate and more than sufficient. So why don't we just raise it up there? So again, 125.56 minus 428 will put us in at 121.28. So let's elevate that. We'll raise the stop. Just a click, drag, go. 121.28 approximately. All right, 31 is close to 28. Let's go with it. All right, 121.30. I'm not going to go around figure, everybody. We're going to come underneath that. I've got to go with a bit more of a unique number. So we are going to go down to, say, 27. 121.27, about 1 ATR beneath the 20-day moving average on all our shares in Dollar Tree. All right, so tomorrow morning that will initialize and we'll be ready to go. All right, and then our last in the example portfolio is a fun discussion because the trade has gone in our favor and the stock is moving aggressively in our favor today, up 26% on Zebra. Now, let's go back for a quick review of why we got into Zebra. And I'll just remind those of you who were here, and maybe for those of you who are joining us for the first time, this one was all about buying in and believing in a broken downtrend. We had the 3 instances trading above the 200-day moving average that did not hold. And when we bought into this, what we noted was we had a couple of days breaking higher. We had the green, 3 consecutive beautiful moves, and the blue downslope 200 period moving average was being held. And so we decided that was going to be a potential for entrance early into a stock that might be developing into a new uptrend. Well, today's move certainly gives us some opportunity to take some profits here. So we're going to take a couple of steps. The first, we're not going to look a gift horse in the mouth and say thanks, but no thanks. We're going to sell a portion of our shares at tomorrow's open price, whatever that ends up being. Probably something like above 365, just to give us a little bit of wiggle room there. Our position on this, everybody, I'm going to go back to our trade here. Here we go. So we only have 20. And I know 20 is not a huge position size, but it's important that we pat ourselves on the back for a trade well made, and let's provide an exit strategy on the remainder. So first thing we're going to do, I'm going to right click, create a closing order, and I'm going to tell it, yeah, that's great. I don't want to sell all 20. I only want to sell 15. And we're going to do that tomorrow at a limit of at least 365. So again, not 65, let's say the close was 368 or 363 by 370. Yeah, 365 is right in the middle of it all. A few bucks under the close shouldn't be a problem. If you want to give it $5 less and go 360, that's also fine. Remember, everybody, when you do this, if you say 360 or better, that means whatever the going price is, as long as it's above 360. So if the trade tomorrow morning opens at 369 and our limit is at 360, if 369 is the first trade of the day, we're going to execute pretty darn close to 369. It's not going to be 360 or our limit at 365. You're going to be buying at the cheapest, excuse me, I should say the cheapest amount possible. Sounds like I may have misspoke there. What I mean to say, if our limit is 360 and our open is 369, we are not buying it until we can get it at 360, right? If we go in with a higher amount at, say, 370 and it opens under that, we're still going to get the shares at the lower price, not the price we're willing to pay. That's what I meant to suggest there. I hope that was more clear. So we can actually go with a 370 limit here, or a 365 limit here, and see if we can't get out of a portion of it. So let's just do this for 5 shares to get out at least 365 or better, and that would be profit for us. So we'll set that for tomorrow. And then our remaining shares, we're going to use the gap, okay? So the gap here, the low open today, let's just take a look. Low of the day was 329.47, and our open was 330. So we could basically put a stop in about 1 ATR, which is 1588, 1589, beneath the low of the day at 329.47. So again, this process might not be for all of you. Some of you will look at that and say, Kevin, that doesn't help me because I'm putting a stop in that is 35 or 45 or 50 points under the last trade. Well, partially, that's why we're selling some tomorrow morning, right? Right away, we're going to pat ourselves on the back for a trade well made. And some of you would say, I appreciate the gap zone, but I'd rather build an exit strategy based on something I see in maybe the hourly charts. And that could work for you too. But how are you going to do that? What is that process for you? Is it a simple moving average on the 1 hour bars? Is it maybe a 15-hour bar using perhaps the 20 period exponential moving average? Notice that it rode that all day today. Maybe trader, you want to put it under that level as an example only. You got to be thinking about where these trades would execute and what does that mean to the amount of profit you're giving up. Right? We have a really good trade on. Some of you wouldn't even take the risk of sticking with any of these shares tomorrow. So not just selling 5, maybe you would sell the majority and let the smallest portion run. But whatever the case, if you're selling some up here, you got to make sure we raise our stop or bring our stop back into the discussion for the remaining shares. Okay. So some of you might like, 358 minus the average range of the stock on the daily chart. That could work for some of you. Okay. And some of you would just say, you know what? Let's see if this gap is as significant as it appears, and we'll put that stop beneath the gap. Okay. So we're going to actually go with beneath the gap. We're going to see what's going on if over the next few days. So again, we're going to use the low of the day, 329.47 minus the ATR of 1589, and that gives us 313.58. So I'm going to now, remember, we only have 20 shares, so this stop is now going to be cancel and replace. We're making it for only 15 shares now, and we're raising that stop good till canceled up to 313.58. All right. Now, that does look like it's in no man's land, but the good news is if the stock keeps running, here's the weekly look, by the way, everybody. This is the high trade the stock has seen since all the way back to February of last year. So you're looking at almost 18 months. If this thing keeps running, then we'll participate in the keep running process. Okay. Let's get our, we'll see if it goes that way. It certainly doesn't have to. We know that. But hopefully taking some of those profits off will give us, enough of a encouragement to keep doing what's been working for us. So there is a look. Example portfolio. Remain, everybody. That RSG trade I mentioned earlier, the RSG trade that didn't go so great, but we ended up losing a reasonable amount. Reasonable relative to what we were comfortable with within our example portfolio here. We bought in for 40 shares. We did that right here. What we thought we might get was a bit of a breakout, but that breakout just didn't stick. It rallied all the way up to 228. So we had a profitable trade for a while there. We ended up selling in 2 separate layers. We did a partial or 50% exit on a breakdown under the 20-day, and then we did the remaining stop under the 50-day by the amount of the ATR. And that's what kicked us out of this one just today. So there we go. Now we can also obviously see, look here, I mean, this is what we are hoping for. We're not upset with being kicked out or stopped out of this RSG trade, because what do we have is a stock that is now trading at 207 and change at the close, where we bought in at 221. This is exactly the reason we wanted to be stopped out on a legitimate breakdown. Stock is now 5 sessions, or at least 4 sessions, it looks like, under the 200-day moving average. And so that could very easily be construed as a true breakdown in this pattern, right, in this chart. Okay, so now that we know we've made adjustments where necessary, we've got our remaining portfolio here, let's talk about taking all of our process and looking for new example trades. So today, when I look in here, we've got industrials, we've got staples, we've got one tech, and we've got healthcare. Now, move that back up into this class. There we go, building a stock portfolio. I thought, given the nature of today's move, everybody, we should look in technology, because when you look at tech, everyone, tell me this doesn't have a bit of a bullish bent to it, huh? This looks like a breakout after a lengthy down channel, and perhaps we are looking at the beginning of a continuation of this rally that tech has been undergoing. It's been a bit of a rough 2 months, but this is the type of move today that can get traders a little bit enthused and ready to go. So let's look within tech. There's going to be a number of these positions in that space that are already moved or have made a move that's not going to be as comfortable for us to get into now, but let's look at some of those. Again, I am utilizing the uptrend all time frames. Okay, so that's where I got it from, was my personal uptrending all time frames. For those of you who are here for the first time, let's just highlight what this really is. This is a scan of the S&P 500, specifically in technology. Notice up here I've got the intersect with, so scanning in the S&P, intersecting with by industry, all of technology. And when you do that, you hit scan, and then up here, make sure you save the scan query. All right, in this case, it would be technology. So you save it. Yes, go ahead and overwrite, in my case, overwrite it. But ultimately, what that does is it gives us that watch list opportunity over here on the left-hand side. So now when I go to my watch lists and personal, what I just saved was uptrending all time frames technology. That's that watch list. And that target there, that icon, tells me that that is a dynamic watch list. That means that I don't even have to come to my scan tab. I can just open the watch list, and all day, as stocks meet the criteria that I have set for it here, they will be added to the list. And as they no longer meet the criteria, they will then fall off the list. Okay, so this way I don't have to even worry about using the scan tab. I can just keep that group up, and as stocks apply, I can get new note. I can be seeing those, and I can even be notified, by the way. If you click on the link here, you can say alert me when the results change, and you can tell it, yeah, notify me, play a sound. Let me know, do something obnoxious so that I look and see what is that new symbol that's been added or removed from here. Okay, it's a good way to manage yourself on a short-term basis, at least. If you felt like today you woke up and said, boy, tech's going to be hot today, I'm going to watch tech, this might be one of those scenarios that could help you out a little bit. And certainly that doesn't mean that my scan is the one to work with. It's just one that tells you that you're finding stocks and uptrends in 3 different separate time frames. That's a potential opportunity. So let's look through some of these. We've got Palantir had a huge move. Palantir is at potential resistance. If we had bought back there at 125, this is the type of scenario under which we would take a little bit off at resistance and make the stock break through, forcing the hand, so to speak. And if it breaks through, great. We were right to have held some of those shares if we sold up here. So remember, though, that's still a sideways. You know, maybe the trader who wants to get started in a trade and go with a stop 1 ATR beneath the 50-day could alternatively say, what about a 1 ATR beneath the 20-day? That's certainly something that could work as well. Let's see. There's AMD. So AMD, it looks like they're getting whacked a little bit here in the after hours, right? They had earnings, so 519, 478. So that's a pretty healthy drawdown. That's not going to go well for tomorrow, it looks like, at least not immediately. Let's see. Microsoft made a big move. Maybe has confirmed the 200-day as long-range support, but we're probably a little bit extended, perhaps. Doesn't mean you can't make a trade work, but that might be a little uncomfortable using something like the 200-day moving average for an exit strategy. Let's see. The one that actually caught my eye today was ROP, Roper Technologies. There we go. They do vertical software, technology-enabled products, both in the United States and Canada and Europe and Asia. So the reason this one caught my eye, though, everybody, I just got done talking about the 200 day, about how that first test of the 200 day may not stick, but this one stood out because look at all of this action that it has finally cleared here. We go back to late January, and what you see is basically 310 up to about 383. Call it a $70 range that it just broke. Now, are we taking a little bit of chance here? Yeah, we would be. But, the 200 day is right beneath us. We are higher because of the most recent earnings report here. Stock has moved really well. Looks like it's building in a little bit of a bull flag through here. I mean, if we're not comfortable, we can always take a smaller position than we normally would. But I kind of like the look of this one for taking a stab at something that might work out. I mean, we are above the 200. We have a very big range that we have broken. And if this is going to get in gear, well, this would be as good a spot as any to get going here. So let's look at doing so here. So the 200 day today is 382.56. And then we have our ATR on this one at 1685. And that gives us a price of 365.71. Now, notice the 20 day is 368.15. So we would actually be, even with our ATR under the 200 day, our stop order would reside below the 20-day moving average as well. So that's not a negative in this case. That would give us even more wiggle room. But I've got to say, the bottoming action and then this ability to have held this breakout now for about a week and a half and seeing today's action bouncing off the 200 day, that's giving me a little bit of, a little bit of a boost here, I'd say. So let's look at a reasonably sized position. Entrance is going to need to be up there. Let's give it a little wiggle. So up to 395, let's say. And then that means we're looking at about 30 points of downside for our risk tolerance, $30 a share. So 10 shares would be what? About $3,950. And 10 shares with $30 of risk would mean about a $300 loss if we got taken out at our approximate stop level. All right. And so that all fits within our comfort zone. Additionally, the 3,950 is only, it's less than half of what our max position is. So a couple of things. Being that it's our first time at the 200 day, it's a little bit unclear. It looks like a broken down trend. We're going to take a shot at it. We don't have to go at it with the full position size that we normally might. That might be a 25 share position, right? That would be close to $10,000. And that would be perfectly within range and within reason, I should say, given the rules of our portfolio. But given the potential that this doesn't stick and that maybe our first effort over the 200 day won't hold, we don't have to go with the full position. Maybe next week this holds, we can consider adding to it. If we break this flag to the upside and we are above the high we made this week, or the last week, I should say, over 411, 412, 415, maybe we look at adding to a winner here next week. That's a possibility. All right, so I've got my numbers. We're going to buy at a limit not to exceed 395. We'll put in an exit stop at 365.71. We will do that with our buy custom order with OCO bracket. Again, remember, one cancels the other, except we're not going to put a target in here. So let's just use the stop. Actually, we're just going to go with the stop. So our entrance for tomorrow, 395 or better. So as long as any time we're under 395, we'll get into the shares for tomorrow's day only. Thereafter, once we're executed, we're going to have a good till canceled stop at 365.71. And again, this is simply the trigger price. If we trigger at 365.71, we get a market order. So we have gap risk. If we buy these shares are above 365.71 at the close, and then the very next day we open at 300, we're going to execute pretty close to 300. Unfortunately, it's not likely to execute close to our stop. So we have to be aware of that. That added risk is always there with the stop order. But it is designed for our purposes to mitigate the amount of risk we are taking on in the trade. While we can't eliminate gap risk, this will certainly give us the chance to participate and risk an amount that is comfortable for our portfolio, our size, and our plan. All right, so there we go. I'll go ahead and send that off, everybody, for tomorrow's business. So a quick review. We went ahead and we took a look at the closing detail of the broader indices. We reviewed our example portfolio, made a couple of minor adjustments there, reminding ourselves to always use the ATR. Further, remembering that we do not reduce our stop prices, but we raise our stop prices. And reminding ourselves that the choice to raise our stops is one that we don't always have to make. We can leave the existing static stop where it is and allow the stock to continue running in our favor. When we make adjustments along the way, we hope to be doing so with a purpose behind it. So lean into your scratch pad, everybody. Set those levels, know your plan, and do your best to adhere to that plan. Now, next week when we reconvene, let's talk about what I hope is going to be a winning position in Roper here. Hopefully, we'll be able to talk about potentially adding to a winning trade. And with that, I'll remind you, we have that survey in the chat. Would certainly appreciate hearing from you on the survey. Let me just take a look in the final 2 minutes and see if there was any question that I might be able to offer up. Rita, your question about indicators after the close, I think you stick to the trends as much as you can. Watch those trends and moving averages, even in the aftermarket, they can come in handy for you. And remember, in terms of price levels, if those price levels that are of note to you on a daily chart get breached bullishly or bearishly in after hours, those price levels still matter to the stock. So if you were looking at it saying, yeah, if this stock can move through this price, then I think it can get to this next level of resistance. Don't change that viewpoint just because it's moving like that after hours. Okay, so that's where I think watching the trend even after hours is so important there to your process. Let's see. All right, so I think that's about what I can answer. That last question about what an ATR is, that's perfectly appropriate. ATR, it stands for Average True Range. It is a single study that I have added into my toolbar at the top, but you get it from the studies here. It is noted as simply ATR, but it stands for Average True Range, and the idea here is we incorporate it when setting our stops below major trend management levels. In our case today, like the 200-day moving average on ROP here, we are beneath that by the amount of the average range the stock has seen over the last 14 trading sessions. What that gives us is a comfortable amount of volatility, but it possibly increases our chance of allowing basic volatility on the stock to be there, but not kick us out of the trade until the trend truly breaks. That's the goal that we are striving for with ATR here. Okay, we're going to wrap it up there. Hey, if the conversation today was helpful for you, everybody, the thumbs up down below will help us out. We're going to get this reviewed and into the archive for all of you. And that thumbs up will help us with the YouTube algorithm so more viewers who would benefit from seeing something like this can get it due to your thumbs up. So with that, big thank you to Connie in the chat today. Thanks to all of you for participating and being here. You can follow us on X. And I will return for you tomorrow morning for Trader Talk at bright and early with market opening bell. That's at 9:30 a.m. Eastern. It's Wednesday, so I'll be joined by fellow coach Brent Moores, and we'll break down the morning activities. So with that, have a great rest of your Tuesday, everybody. I look forward to catching up with you all again real soon.